Hello, my name is Julia Strauch, and I am a senior consultant with BDO FMA. Today I will be walking you through how to set up and use the cash flow projection template on the Strong Nonprofit website. The cash flow tool will help you understand the day-to-day liquidity of your organization. Cash flow is the mix and timing of cash receipts into and the cash payments out of your organization's accounts. Your cash flow is related to your budget, but it adds the dimension of timing. It takes into account not just what your organization's revenues and expenses look like, but when they come and go. Managing cash flow is primarily a question of when. When we pay our staff, when this bill is due, when the grant payment will come in. Strong cash management is essential for a nonprofit organization, just as it's essential for any business. This tool is intended to help nonprofit leaders, financial executives, and CEOs to project and monitor their cash needs over the course of the year, so that you can plan in advance for any issues that might need to be managed. In order to fill out the tool, there is some organizational finance-related information that you will need to have handy. First, you will need to know when your organization's financial year begins and ends. You will need your ending cash balance from the previous year, or projection if that information isn't available yet. You will need the organizational budget for the year you are completing the cash flow for, broken out by income and expenses, and further broken out by line items. If you are filling out this tool in the middle of a fiscal year, you will also want to gather your actuals to date in terms of both your organization's income and expenses. Finally, you will need a list of any accrued income or expenses, that is, cash receipts or disbursements earned or incurred in the previous year, but which you will need to account for in the current year's cash flow. Now, let's start with a general overview of the cash flow tool. This tool has 3 tabs. The first tab holds the instructions for how to use this tool. This is largely the same information I will be sharing in this tutorial, but it is also a great place to look if you have questions along the way. I've also had people recommend opening the tab on a separate monitor or printing it out so that you can avoid toggling back and forth between the tabs as you get started. The second tab is the Cash Flow Projections tab, which, once set up, will provide a snapshot of your cash position for the year. We'll be going over that in depth in just a minute. The last tab contains pre-formatted graphs that are linked to the information in the Cash Flow Projection tab. Once the Cash Flow Projection tab is filled out, the graphs will automatically populate. I'll be going over those graphs later in this tutorial. Now, I'd like to orient you to the Cash Flow Projections tab of this tool. This is where you will be entering your organizational budget and spreading your income and expenses over the year. Later, once your year has started, you will also enter your actuals into this tab. The top section of this sheet holds organizational information and a key to the color coding within the tool. Yellow cells are for data entry. Gray cells are output cells that will automatically populate using formulas. You should not enter data into these cells. Columns A through C are where you will enter sections from your budget. You will enter your income projections at the top of this sheet and expense projections below. Below the expenses, you will see a section for capital and financing transactions that you are planning for the year. In column C, you will customize the cells to match the categories you use in your organization's budget. In column E, you will enter the amounts you have budgeted. In columns G through R, you will see a 12-month calendar, beginning with the first month of your fiscal year. If you're in the midst of a fiscal year and have entered actuals into the tool, columns V through X will show your year-to-date spend, your remaining budget, and your projected variance. At the bottom of the sheet, you will see two summary lines. Row 114 shows your net cash, that is, your cash excess or shortfall for each month. Row 116 shows your rolling cash balance. This is the row where you will be able to see if your cash needs will exceed your available cash in a given month. The goal is to keep the rolling cash balance at a comfortable level throughout the year. Now that you have seen the different parts of the Cash Flow Projection tab, let's talk about how to get set up for monitoring and projecting the cash needs for your organization for the year. To get started, enter your organization's name in the yellow cell at the top. Next, enter the first month of your fiscal year by clicking the drop-down in cell D3. If your fiscal year has already begun, enter the month you have actuals through in cell D4. For example, if your fiscal year began in January and you are filling out the cash flow tool in April, you will enter March in cell D4 because you will have actuals for January, February, and March. When you enter a month in cell D4, you will see those months turn maroon in the tool. You may enter data in these columns. I will show you an example of how to enter actuals as part of ongoing monitoring and planning at the end of this tutorial. For the purpose of this tutorial, my organization will have a July 1st fiscal year. Let's say I am setting up this cash flow in preparation for my new fiscal year, so I do not have any actuals yet. In that case, I'll leave cell D4 blank. The third piece of background information you will enter into the spreadsheet is your beginning cash balance. In other words, the closing cash balance as of the end of your prior fiscal year. If you are working on this before your fiscal year has ended, that is, if you're planning for the next fiscal year, you should put in a projection of what you think your closing cash balance will be. Then, when the year has closed, you can go back and update that based on the actuals. For my example, I will enter $15,000 as the starting cash balance. If you scroll to the bottom, you will see that the tool has automatically created a rolling cash balance across the year of $15,000. This is based only on your beginning cash balance because we haven't entered any receipts or disbursements yet. The next thing you'll do is enter your cash receipts and disbursements. This is where you will need your organization's budget for the fiscal year. The information about receipts and disbursements will be based on your organization's budget. Let's come back up to the cash receipts section at the top of the sheet. There are several categories here for typical revenue line items in a budget. For example, foundations, corporations, government contracts, and special events revenue. In column E, you will enter your budgeted amount for the relevant line items for the current year. For example, if your organization has foundational grants, you will start entering them in row 12. If you have more than one foundation grant, you'll notice these plus buttons over here on the left. Clicking on that will expand the category and give you more rows to work with. If you have more than one foundation grant, it's a good idea to enter those separately so you can keep them straight when you're looking back and monitoring. You can also type directly in these white cells to rename them. For my example, let's say we get a grant from the Wallace Foundation. I'll type Wallace Foundation into line 13. And let's say the grant is budgeted for $100,000. So I'll enter $100,000 in column E. Let's also say we have a grant from a local foundation that is budgeted for $25,000. You should do this for each of your categories of receipts. Again, for demonstration, let's say we are planning to receive $15,000 in individual contributions, and we have one federal grant for $50,000. We also have a special event that brings in $10,000. So I will enter each of those in column E for the appropriate categories. In row 56, you'll see we have a section for prior year receivables. If you happen to have any receivables that you're carrying forward into the current fiscal year, you would enter those items here. Note, prior year receivables would be items that are not technically in your budget because we're budgeting on an accrual basis. What are some examples of receivables? Let's say that the organization did some service in May of last year and billed for it in June, but the cash itself hasn't come in yet. Or you had a contractor do something for $5,000. You billed for it, but the cash has not come in yet. So it's not part of your current budget, and you'll see that it doesn't total into your current budget for the year. But it will be part of your cash flow for the year, so we'll want to account for it on this spreadsheet. I'll add a receivable of $5,000 for my example. Once you have entered all of your cash receipts budgeted for the year, you will spread these in the month columns of the year, based on the month that you expect the cash to actually come in. So let's go back up to the Wallace Foundation grant. And let's say this grant comes in October of every year. So we'll put $100,000 in October. When I do that, you'll see the total in column T matches the budget in column E. The local foundation gives us 2 installments of $12,500, and we get one of those in September and one of those in March. You'll see these totaling over here in the total column on the right as I add them in each month. If you look in the variance column while you're filling out the spreadsheet, you'll notice that before we spread the expenses across the month, there was a variance, column X. But once we spread the expenses, there was no variance. In other words, if you spread the entire budget amount across the months, then the variance column will show at 0. At this setup stage, this is a good way to check that you have in fact allocated all of your costs or revenue into the appropriate months. Once your fiscal year starts and you begin getting actuals, you will start to expect some variance as your actuals will deviate from your budgeted plan. Another feature I would like to highlight is the thereafter column. You can unhide the thereafter column by hitting the plus sign above column T. This column is helpful if you budgeted on an accrual system, but you have items that you do not intend to collect in the current year. For example, if you have a service that you will provide late in the year, but you won't actually realize the cash until the next fiscal year, then you would put those amounts into the thereafter column. For our example, we'll spread the rest of our revenues in the same way. We've got individual contributions here, and we expect that most of our individual contributions will come in around the end of the calendar year. So let's say we get $5,000 in November and $5,000 in December. And let's say we have our annual appeals letter that goes out and we start to collect some cash from that in May. So I'll add another $5,000 here in May. And let's say that we have our federal contract payment in October. And for our special event category, we'll have our annual gala in August. And then we'll receive this receivable. Let's say we're going to collect that in July. Once you have spread all of your cash receipts, you should scan the variance column again. I see nothing in the variance column, which tells me I've allocated all of our budgeted receipts into appropriate months. So I'm done with the cash receipts section for now. If I scroll down to the bottom rows, I see that the net cash and rolling cash balances have changed based on what I input in the cash receipts section. Where before the net cash was 0 for every month, now I see net cash equaling the receipts I entered above. Rolling cash has the $15,000 I started the year with, plus all of the revenue I have entered. Next, we'll do something very similar for the cash disbursements. These will be based off the expense section of your budget. We will put our budgeted amounts here in column E. Again, we've got typical line items for personnel and other than personnel, or OTP lines. If you want more expense lines, use the pluses at the left. For your personnel lines, we have pre-populated some common categories, including salary and wages, payroll taxes, medical benefits, pensions, and some blank categories you can customize based on your organization's budget. Under the Other Than Personnel expenses, you'll see rent, utilities, etc. Below the OTP lines, you will see a section for prior year accruals. Again, similar to the prior year receivables, if there were expense items budgeted last year where you didn't actually send in the cash until this year, you would put those items on this line. I'll enter some expenses for my example. For salaries, I'll enter $120,000, $8,000 for payroll taxes, and $15,000 for medical benefits, $1,000 for pensions. And for my other than personnel expenses, I'll add $24,000 for rent, $2,500 for utilities, and let's put another $2,500 in for the cost of that special event. Again, on the disbursement side, you want to spread all of those budgeted disbursements into the appropriate month. One thing I want to bring to your attention is this column, column F, spread evenly. Choose yes in this column if the expense recurs at the same amount every month of the year. Rent is typically a good example since organizations usually pay the same amount every month. In many cases, salary is basically a recurring item that doesn't really change that month from month to month as well. So in those cases, you would just select yes from the drop-down menu here, and you'll see that it will spread that $120,000 in salaries equally over 12 months of the fiscal year. So in this case, $10,000 per month. For our example, salary, payroll taxes, and medical benefits are all spread evenly, so we will set that up now. Our pension contribution is a one-time thing in December. We'll also spread rent and utilities evenly. Since our special event is an annual gala which occurs in August, I'll put those expenses in August as well. You can also use the spread evenly option up here with your receipt categories. It's just not quite as common to have regular payments coming in every month. But if you do, that's an option that's available to you here as well. Another thing to note when filling out this tool is you should not include non-cash budget items or other items that don't affect cash flow. Depreciation, for example, should be an expense item in your budget, but it doesn't directly affect cash. So we are not building it into this cash projection model. For this reason, the cash flow projection template and the budget totals that you see here in column E might not reconcile exactly to your board-approved budget. But the budget should still be the framework for projecting out cash receipts and disbursements. Below the disbursements section is a section for capital and financing related to cash flows. You can add in any receipts from loans or credit lines, or transfers into your cash accounts from your savings or investment accounts. Here is also where you would reflect disbursements in the form of capital purchases or repayments or transfers out of your savings and investments. I'm not going to enter anything here for the demonstration, but it works the same as the items above. You would enter the budgeted amount and then spread the cash flow into the appropriate months. Now that we have entered our expenses, let's review our output lines at the bottom of the tab. Line 114 is going to show your net cash excess or shortfall for the individual months. Line 116, here on the bottom, will show your rolling cash balance for each month. In column T, we see $32,000 as our total cash excess for the year. However, in row 116, we can see that there are some months where our rolling cash balance is projected to be negative. Said another way, if things play out the way we have forecast, we will not have enough cash to cover our obligations in August and September. We do have a large influx of cash projected in October, which will smooth things out for the rest of the year. This is a red flag that will need to be addressed before we get to that point. Maybe we'll take a draw on a line of credit and repay it later in the year. If we did that, we would reflect it in the tool in the Capital and Financing section. We could take $5,000 in July and repay it in October. When I do this, you'll see our rolling cash balance is now positive for the whole year. But our total net cash excess or shortfall has not changed. Note, drawing on a line of credit will probably give you an interest expense as well that you would want to account for in the tool. Alternatively, you may have ways to shift your expenses within the year. For example, negotiating with the venue where we're having our annual gala and pushing that expense back by a couple of months. If we move that expense to October, then at least we're in the black in August and September. Although $125 rolling cash balance is probably still a little too close for comfort. The point here is that this tool gives early warning if you need to address any cash issues, so you aren't faced with a crisis at the last minute. Now that we have our data input, we can also get a feeling for how the Graph tab works. The Graph tab exists to help you visualize your cash position for the year. You should see two graphs on this tab. The first shows your monthly projected cash balance. This is the same information as line 116 of the Cash Flow Projections tab, which we were just looking at. Here you can see that our cash drops to almost zero in September, then shoots up to almost $140,000 in October. It stays in the $140,000 to $40,000 range for the rest of the year. Note, this is our rolling cash balance. Although we only expect $32,000 surplus for the year, our cash balance at the end of the year will be higher because of the cash we brought in at the start of the year. The second graph compares your monthly cash receipts and disbursements. This graph draws its data from line 32, total cash receipts, and line 99, total cash disbursements, of the tool. You can see in our scenario, cash disbursements in red are fairly regular throughout the year, with some small increases in October and December, where we have one-time payments. Cash receipts, on the other hand, is pretty variable. In October, we see those big receipts from our foundation and government grants. In January and February, there are no cash receipts at all. This is not an uncommon cash flow structure, but it's certainly something you want to be aware of and manage toward. Now we have completed the initial build-out of the cash projections for the year. But in order for this to be a really useful tool for ongoing monitoring of your cash position, you'll need to keep it updated over the course of the fiscal year. You do that by inputting the actual results on a monthly basis into this same spreadsheet. We'll start by indicating in the tool that we are adding actuals. At the top of the tool in cell D4, you'll choose the month you have actuals through. For example, if we are updating the tool after the close of July, I will choose July in the drop-down. My July column has now turned maroon. Now column V will show your year-to-date receipts or disbursements, and column W will show your remaining budget for the year. You can see this in the cash disbursements section of my example. Column V shows my July spend, and August through June is summed up in column W. If I move the actuals to August, you will see that the year-to-date column increased and the remaining to budget column decreased. The variance remains at 0. Let's walk through an example of how to update your actuals and the kinds of decisions that updating process might prompt. Starting on the receipts side, let's look at that prior year receivable that we had budgeted here in line 57. We expected to collect it in July. July happens and it turns out that it didn't actually come through in July. But we got a call from the group letting us know that the payment will come in August. When we update our actuals, we will remove it from the July column and move it over to the August column. Looking down at our output lines for the rolling cash position, this makes our cash position for July a little bit tighter. But we know we will eventually receive the payment, so we keep it in the budget and we simply shift it forward by a month. Now, let's say that something else happens in July. We get an individual contribution that we had not been expecting. Somebody learned about our organization in the newspaper and thought we were doing great work and sent us a check for $1,000. We put $1,000 into the July column for individual contributions. Since we are still expecting the year-end contributions to come in as they usually do, and the appeals letter to go out in May, resulting in another round of individual giving, this means we're not going to change those receipt amounts in the tool, and the tool will show a positive variance over here of $1,000. Now let's take a different type of example. Let's look back at our local foundation, where we were expecting to receive $25,000 this year. We check in with them, and due to some unexpected circumstances, they are not going to be able to send us the second half of the grant that we had expected in March. Since we are updating this spreadsheet on an ongoing basis, when we get this news, we will go ahead and delete this expected receipt from the local foundation in March. That again changes our overall projections and gives us a variance, in this case a negative variance, of $12,500 on that item. This also starts to give us a sense of where we are overall. With just those changes, you can see that we now have an overall negative variance of $11,500 within our cash receipt. You'll want to do the same thing every month on the disbursement side, updating actuals when you close each month. Disbursements are particularly important as they can vary pretty widely based on timing factors. Also, update any changes to the capital and financing section. Once you enter your monthly actuals, the bottom lines will update automatically and show you what your overall cash position for each month looks like. Reviewing those lines, especially the rolling cash balance line, is how you can get a sense for any upcoming challenges or issues that you might need to address before they become a cash management crisis. That is how to set up and update this tool for planning and monitoring your organization's cash position over the course of the year. I hope this will be helpful to you in running your organization, And remember that you can find many other useful tools for strengthening your organization's financial management on the Resources for Financial Management section of the Wallace Foundation website. Thank you.